All right. Good morning, trade pros. Welcome to our morning market update for this beautiful Wednesday, August the 21st of 2019. Hope you guys are having a great day. I am. I have a lot of energy, and people who don't like that in the mornings. So let's get started. We got a lot of things to talk about. First and foremost, a week of central banking talk is set to kick off today with Jerome Powell's and other cronies. I shouldn't have used that term. Jerome Powell and his Federal Reserve voters had a meeting July 30th to 31st. In that meeting, they decided to cut rates for the first time since 2008. All right. And today we get to see the meeting minutes and the discussion that led up to the decision to cut the rates. All right. Traders will be looking for signs of any disagreement on the FOMC or wide agreement, meaning that they adopt this policy, or whether or not there's some people who dissent and reject it. That's going to be very interesting. All right. And for clues as to the next step of the monetary policy that's expected out of the Federal Reserve. This afternoon at 2 p.m. has got two opportunities. Number one, for it to be very volatile if new information comes out about monetary policy or how it's being viewed inside the Federal Reserve meetings. Or number two, it does absolutely nothing because we already have that info and they're going to say, okay, great, that's awesome. No new information disseminated. So let's push forward and wait for the next event, which I'll tell you about in a moment. And right now, all you need to know about the Fed is this. There's a big ponderance, if you will. People are wondering in the marketplace, was this cut a mid-cycle adjustment, like Jerome Powell said, or is this the beginning of a quantitative easing process through the mechanism of cutting rates? And could there even be a stimulus package? If there is, this time it'll be pretty historic because it's happening without a recession, right? But there are some fears circulating of one coming up. This event today, the FOMC meeting minutes at 2 p.m. Easterns when they come out. By the way, we'll be trading that in their elite room. Victoria will be leading it. And if there's opportunity, we'll take advantage. If there isn't, that's okay. I haven't lost money on a trade I haven't taken. So just be cautious, patient. And that afternoon, you'll have an opportunity maybe, but you have to be really disciplined and diligent and wait and be patient. If there is an opportunity, don't just jump in there and start clicking the button. Very dangerous. Tomorrow we have ECB's minutes. The European Central Bank's meeting minutes are tomorrow morning, and then that sets us up for Friday at the infamous J-hole meeting. Jay Powell's at the J-hole. That was one of the headlines on news service I read, and I died laughing. Thought I'd share with it. So Jay Powell at the J-hole. What does that mean? It's called Jackson Hole. It's a symposium held on Friday. All right, and all the focus and attention will turn to Jerome Powell's address at 10 a.m. on Friday morning. Other Fed speakers speak throughout this, and the Jackson Hole Symposium is basically a whole bunch of central bankers globally from around the world joining into one conference room to talk about monetary policy. All right, so global central bank leaders are there now. It starts today. Tomorrow, they're going to make an announcement at 10 a.m. Jerome Powell is going to speak. In the past meetings, there have been monetary policy changes that were signaled out of these meetings, so they're very important. So the attention turns to that on Friday. All right. Ahead of this, Dow futures are up 173 points. S&P and NASDAQ futures are up almost a percentage point each. And Donald Trump yesterday at 2:18 p.m. tweeted and made an announcement. He said, we're looking at possible tax cuts all the time. Not talking about doing anything at this moment on tax cuts, but it's something I'm thinking about. We think about tax cuts all the time. I'm not talking about tax cuts now, but I'm thinking about tax cuts. That was a tweet. Enough to get a little bit of an excitement rally in the market. He said that a lot of people would like to see a payroll tax cut. He would also love to reduce capital tax gains or capital gains taxes. Think about a payroll tax cut. So Obama did it and nobody noticed. All right, they saved like $60, and because it comes out of your check, most people don't notice. Do you know what comes out of your check? I'd be willing to bet that if there's a little bit of a deviation, you wouldn't really notice. If it was a couple dollars a check, you wouldn't even bother inquiring. That's my assumption, at least. I probably would because I don't like changing numbers when I expect them to stay still. And I don't like income that's guaranteed every single 2 weeks. Funny story. My friend's wife said to my wife also runs a business. She said, how did you leave your job and start a business? Aren't you afraid of not getting paid every 2 weeks? She said to her, honey, I get paid every day. I'm like, that's my wife. I'm a gold digger. I'm kidding. She actually funds all my trading, guys. Just kidding. All right, and then the Federal Reserve, or Donald Trump rather, in this tweet also said he wants Jerome Powell to cut interest rates by 100 basis points. That's a significant cut. That's cutting half the interest rate to stimulate and further grow economic activity. He said the U.S. is not ready to make a deal with China. I'm starting to think that they don't want to make a deal until 2020, somewhere in the middle of the year. If you think about the timing of what's going on in 2020, that would make sense. All right, push this thing out to the next year and then suddenly make a deal. And it looks great if China wants to. The G7 meeting is starting this weekend on Sunday. And that's that from Donald Trump and his tweet. There's three ways governments they have three tools, all right? And one of them they don't even control, that they could actually use to stimulate an economy, all right? Number one is deficit spending. We've seen the budget. We've already, in the United States, the budget's already exceeded by 30% where it was at the year prior. So they're doing deficit spending, the U.S. administration. Tax cuts. Donald Trump's already implemented tax cuts. Yesterday, he made mention of more. So they're using the two of the three tools they control directly. And the third one they control indirectly, which is lower interest rates. And I don't think anyone's surprised to know that Donald Trump wants lower interest rates by 100 basis points. I just told you that. So, there's some stimulating measures going on in the from the administration side. And I think a lot of traders starting to get concerned about the economy and how much longer this thing could run. We did a great piece about it yesterday with our elite team. We did a presentation on bond yields, signaling recessionary tones, what it means, how to trade it, how to relocate your portfolio, when, all that stuff. Thinking about releasing it to you guys on YouTube, but I'm not sure yet. I'm still thinking about it. If you think it's a good idea, put yes in the comments. Yes, I'd like to see that video. If not, then I ain't gonna do it. All right. Risky mortgages are making a comeback. This kind of blew my mind. It didn't blow my mind. It was sort of one of those things where you say, oh, well, here we go again. But it's still kind of interesting to see it. More than a decade after home loans triggered the worst recession in a long time. All right. The requirements for lending are starting to erode again. All right. Home buyers with low credit scores or high debt levels are finding non-traditional mortgage structures and are finding it easier to get credit. Right? These back in the day when I worked at the bank were called ninja loans. No income, no job, no assets, ninja. And they're able to get loans for a mortgage. Another way to call it is liar loans. It's another, unfortunately, term in the industry. Borrowers took out 45 billion of these unconventional loans last year, the most in a decade. It was about 65 billion in 2008 as the housing bubble popped. So it's not as high, but my gosh, it's getting there, right? It's not that far. What's $20 billion? It's a lot, obviously, but we're almost there, and it's the highest in a decade. It's on track to raise again in 2019, all right? But this time, they're not calling it subprime. No, they're not, because subprime seems too familiar to people. You say subprime, and even the average person now with the movie like The Big Short understands what subprime is. Remember Penelope Cruz in the hot tub explaining? Was it Penelope Cruz? Oh, yeah, Margot Robbie in the hot tub explaining about loans. And everyone's like, oh, I get it now. This is great. Let's keep drinking wine and having a good time. Everyone knows it's become a household name. So they're not going to use that. Now it's called non-QM. All right. They're called non-qualified mortgages. Non-QM is the buzzword in the industry because they don't comply with post-crisis standards that are set by the Consumer Financial Protection Bureau, which with the intent of that was to prevent borrowers from getting loans they can't afford. But hey, you know what? Interest rates are going down. Banks have to make money. If you're getting squeezed on your margin, you have to make up volume. Everyone knows that in business. I don't blame anyone for this action, but it's interesting to see these non-QM now, that's what they're called, mortgages increasing so much, the most in a decade. I thought I'd share that with you. That's big news that went under the radar in the media. In today's markets, Japan's down 0.3%, Hong Kong's up 0.2%, China's flat, India's down 0.8%. So a mixed bag of nuts in the Asian session. In Europe, London's up 1.1%, Paris up 1.5%, Frankfurt up 1.2%. Strong gains in Europe. In the U.S., Dow's up 0.7%, S&P's up 0.8%, Nasdaq's up 1 percentage point. Crude oil is up 1% as well. Gold is down slightly. Bitcoin down 4.4% to 10,203. Seems to be finding its area of consolidation at 10,000. Bitcoin staying at 10,000 is a good thing, right? If you're a Bitcoin investor or trader, it's staying at 10,000 isn't a reason to worry. If you're thinking to yourself, why isn't this thing going up? All right, consolidation is a good thing. Okay, consolidation is where a lot of money changes hands. Movement is where a lot of money doesn't change hands. So a consolidation is a sign that there's money getting into this market. So you're in good shape. Just have a stop loss. 10-year Treasury yields up 3 basis points to 1.59. The yields are increasing, which is good for the stock market, bullish perspective. All right, this morning of 10 a.m. existing home sales, 10:30 crude oil inventory. This is the report which in 1 hour of one day of the week, you could make your whole weekly income, no matter what job you do. It's that opportunistic. I've been saying that last couple weeks, and it hasn't been as opportunistic as usual. However, as a net whole average in a long period, crude oil inventory reports a place to be at. And then 2 p.m. we have FOMC meeting minutes. A lot of volatility today. You guys manage your risk, trade like a TRADEPRO. Today we're going to be looking at how this early momentum holds out. I'm going to be looking to fade the early momentum by the mid-morning weakness and ride it up for the afternoon. You guys have a great day. Appreciate you all. Send you love, joy, and happiness. And if you like this video, please click the like button. It really helps us. We've done these videos, 500-600 of these videos now, 2 years consecutive on a daily basis. And we just need your help to hit the like button, subscribe, and share with any of your friends you think would find it helpful. All right. Appreciate you guys. Love you all. See you tomorrow morning at 9 a.m. Now I got to turn around and open up the trade room. Adios. If you want to trade the meeting minutes, sign up for Elite. You can trade it with us in the room today together. We move as a united force of like-minded traders. And crude. And if you want to trade crude oil at 10:30, sign up for Pro or Elite. Check it out. You want to see how we trade. You have a 14-day money-back guarantee. It's risk-free. We're not like other companies, money-back guaranteed. And you ask us, why? Why do you want your money? That's a waste of my time. You want your money? Take it and go. Remember Russell Peters? Take it and go. I don't want to deal with somebody who doesn't want to deal with me. That's just life. So come out and check it out. You have 14-day money-back guarantee. You're going to love it. Join us. Crude oil is at 10:30. You have a little bit of time to think about it, but not too long. Goodbye. All right, trade pros in the room. Now that we've said goodbye to YouTube, it's time for us to do some work. Dive in, draw some levels to the S&P, generate some trade ideas, wait for the opening bell, and smash these markets. I'll let Victorio start off with the S&P 500 because he's full of energy this morning. Then over to Boxy for crude oil, and then I have one piece as well before the opening bell. Let's get started.